You might be wondering, why don't banks want to do construction loans, right? The big thing from a bank perspective is it's just not easy. It's not cookie cutter for the bank, right? Like the admin burden is heavy on something like this. It's not like, I've talked about it before. You don't, you fund the loan and then that loan's on your books and you forget about it for the next 5 years. It's just not like that. You're funding, like you mentioned, Neal, in stages. You're funding maybe the initial draw at the weather tight stage, and then you're going to have 2 or 3 or 4 more draws throughout the life of that mortgage where you're going to have to be underwriting the deal again each time and appraising the deal each time, right?
Exactly. I think there's enough volume of just clean, simple, standard, fixed, amortized loans.
It's like, why do we bother?
Why do we add in this complex product?
Exactly.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal and Ryan and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 85 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, how you feeling, buddy?
Freaking out about the economy as I always am.
Oh, nice. So nothing new.
Nothing new.
I think
I'm more stressed than ever.
Okay.
The internet's funny. I don't know if anyone follows or looks at... imagine if you're listening to this, you listen to other podcasts and watch YouTube videos and all that. Like my whole YouTube stream is a bunch of these... I don't say they're AI made, but they're like animated economics videos. Mm-hmm. And it's funny because everyone has different opinions. Like if you want to search that the economy's doing great, you'll get a video. If you want to search that's doing terrible, you get a video. But the interesting thing that's come up now is, have you seen these news sites that compile all the articles on a topic and then give you if it's a left-leaning or right-leaning article? Have you seen that?
No.
I'm debating subscribing to it. There's a couple of them now that do it. I forget the names of them. But it's interesting because they'll be like, they'll show a bunch of topics and they'll be like, look, the right is covering these topics, the left is covering these topics, and then this article is covered by mostly left-owned news sources versus right-owned, so it can help you to have a consideration of what you're seeing. But anyways, all to say, the reason I'm freaking out is just there's more and more from both sides kind of just stating that there could be some headwinds.
Interesting.
Not the end of the world, but it's just something to be considered of. And like I said,
we should all freak out.
We should all freak out.
Okay. Press the panic button.
Exactly. That's actually what causes the most issues is when everyone freaks out. So me screaming constantly is probably not the best way to handle it.
Nobody's listening, Neal.
Nobody's listening. So but that's what's going on in my head.
All right. Neal, have you ever wondered about how you would obtain a construction loan? Has this ever crossed your mind at any point?
7 years ago it did.
Okay.
Yeah.
Okay. And did you wonder whether you should look, to a bank or a credit union or a private lender at that time?
Yeah, I was very lost. I didn't know if you borrow them from people or how that worked at all, to be honest with you.
Okay. Well, welcome back, everybody. I'm Ryan McNeil. I am co-founder and president of Keystone Mortgage Investment Corporation.
I'm Neal and Ryan, and I'm co-founder of the Keystone Mortgage Investment Corporation.
All right. And today we're going to tell you all about construction loans. We're going to do a deep dive into construction loans across the board, primarily focused on the private lending space. But Neal, why don't we start by defining what a construction loan is?
Okay. Kind of in the name, it's a loan for construction. So you can start there. There's a mixture, like there's kind of the two different types. There's like brand new build and renovation. They're both called construction loans as far as the bank is concerned. Yep. It's typically a loan term that's shorter. If it's brand new construction and something big, it might be 24 months, but on average, whether it's a reno or a build, it's under 12 months. And typically what they're doing is they're advancing you money as you get more work completed. And the reason being is technically the asset that you're working on is not worth the end value. So for example, if you're talking about building $1 million house, but you're sitting on a piece of land and you're like, well, the house is worth $1 million. Yeah, they can't advance you that $750,000 until you're at that finished home. But they can say, okay, well, your land's worth... of that $1 million, your land's worth 100. So we'll give you a piece of that to get you started. And then we'll take you the next piece once you're at weather tight. And they'll want to see a bunch of different stages, which you get outlined. Typically, actually, a lot of them, especially if you're new, won't get involved even in the land. They'll want to see you get to a weather tight stage before you go forward. We'll talk about that in a minute. But yeah, that's the main idea. It's a loan designed to help you get through construction. I know when I started, I always assumed that people were just doing construction out of their pockets. They'd buy the place, they do all the work, and then they would basically refinance at the end.
Yep.
And then as I went through it, I started to realize, I'm like, that's not scalable at all.
Nope. Cash
And
intensive.
it's so cash intensive. And you'll see like even some home builders that have been in the game for 30 years, they've been building all their homes cash, slowly building up a pile so they can do 5 or 6 at once. Well, COVID was a prime example. When all the prices ran through the roof, all those cash builders got destroyed because like, oh shit, I have 8 houses underway. I had budgeted $5 million to do it, and my costs went to $7 million. And because I've always been all cash, I'm dried up. I'm tight. So anyways,
No dry powder left.
No dry powder. So this is where the construction loans come in. And the last item is just oftentimes they're interest only. So you're not servicing any principal repayment. It's very much a term of like you pay this interest rate for this amount of time. And then at that point, we either convert to an actual amortizing mortgage or you take us out with an amortizing mortgage.
Yeah.
And because of that, also due to the elevated risk, the interest is typically a higher rate than what you'd see. Even if you're with a prime lender on an insured mortgage, your construction portion will be more expensive than your final amortized amount.
Yeah. You know what's interesting is just as a sidebar here is that I always assumed all construction loans were interest only. I know on the private side, at least with us, it's always interest only.
Yep.
I had a broker in PEI, Jordan Ellis, told me the other day that and I don't know if it's local to there or not, but that with the credit union, they only had like a small period of interest only. It was like 5 or 6 months, and then it went to P&I right away, regardless of what stage you were at.
I would say I've borrowed construction money from the credit unions here, and I've paid P&I. Yep.
Wow.
And when you're doing the big insured ones, they're also P&I.
Because that can ramp up real quick when you're like taking draws and you have to start paying principal at the same time during construction.
It's insane. I've gotten to the end of projects where my payment's like $12K, and then when I switch to my actual proper mortgage, it's like $6.
Yeah.
And it's because I'm paying P&I on this huge interest rate.
Sure. Yeah, on 8 or 9 or 10%.
Yes.
And then ideally on the back end, you're refinancing at 4, right?
Exactly.
Yeah. Crazy.
It can be kind of fun when you get that brought down, but at the same time, it's crazy.
We'll jump into that too, and like how we see this as a great solution from the private side. But why do you might be wondering, why don't banks want to do construction loans, right? The big thing from a bank perspective is it's just not easy. It's not cookie cutter for the bank, right? Like the admin burden is heavy on something like this. It's not like, I've talked about it before. You don't, you fund the loan and then that loan's on your books and you forget about it for the next 5 years. It's just not like that. You're funding, like you mentioned, Neal, in stages. You're funding maybe the initial draw at the weather tight stage, and then you're going to have 2 or 3 or 4 more draws throughout the life of that mortgage where you're going to have to be underwriting the deal again each time and appraising the deal each time, right?
Exactly. I think there's enough volume of just clean, simple, standard, fixed, amortized loans.
It's like, why do we bother?
Why do we add in this complex product?
Exactly. And this could be across the board. This could be self-builds. This could be first-time builders. This could be custom homes. This could be spec homes. It could be commercial builds. It could be a variety of reasons. They all have that added complexity burden versus a standard purchase or refi.
These mega home builders probably aren't getting construction loans on their properties. From my understanding, most of them are set up as like a mega line of credit.
Yeah.
Like we have a $30 million line of credit.
That's exactly it.
Because they don't want to have to be administering each friggin' house that they build.
100%. And the problem is for those builders is you have to reach a certain scale and have a certain credibility or brand for years before you can get there, right? So on top of that, banks have very strict underwriting with construction loans, right? They want to see full architectural plans. They want to see multiple contractor quotes. And they want to see the borrower with extensive cash reserves, which is not easy to do.
I'm just laughing because I remember I had a bank loan for construction, and it was such a nightmare to get the first draw approved. By the time the first draw was approved and funded, I had actually finished all the construction. I just paid cash for it.
You're waiting for the third draw when the first one got approved?
Yes, so I just refied them out. I was like, this was ridiculous.
Crazy. Of course, you just mentioned it, Neal, but there's long turnaround times for the inspections and approvals. And all of this can create, of course, friction in your project, delays. You could jeopardize your timeline for your build as well, or even your entire project, right? You might have people that are walking off site as a result of the frustration of not getting paid on time, or being at a standstill if you're not able to purchase the materials to progress the build.
Taking their materials back off site.
Absolutely.
So now you're sold on private construction loans. We need to get
set
you
it up
qualified.
perfectly. So what do you need to qualify on the private side, Neal?
So right off the hop, decent to good credit. It's not, again, obsessive with the bank where like banks might have say, if you're not a 725 or a 750, we won't even look at it. We want to see that you have good credit history, and we understand that you might have high utilizations. You're running a business, you're trying to build properties, and like that can make it hard for your credit score to constantly stay increased, and you will take hits every time you take these new loans. Experience in the industry, we would very much prefer seeing you have industry experience. Now, if it's your first project, we can do that, but you might need to put in a fair bit more cash or equity or have a cosigner or additional property you can put up. Just because we're not doubting you, but ultimately we have to work off an experience basis. It's like anything. You still need plans. Like if you're coming into this, you're like, I just have a piece of land with no plans approved or anything to work with. We're going to need to see some plans and that you have quotes. You actually have something validating the cost that you're submitting to us. Again, with any construction experience, you would just have that anyways for your own self before getting involved in a project. So those things, if you're already not thinking about that, then you should probably consider whether this project's even for you. But those are practice items. Proof of income, we do want to see that you're making money somehow. Like you're not going to try and pay yourself directly out of this project. Yes, as a business grows to be a lot larger, technically they're paying themselves out of the projects. But off the hop, again, if you don't have a ton of equity, a ton of cash flow to get into something like this, you can't be then drawing additional money out to run your lifestyle. And then finally, on that same note, we want to see that you have a bit of liquidity because there is cost overruns. We all know construction doesn't almost ever hit the budget. And so you need to be prepared to cover those because oftentimes you may say, okay, I only need $500,000 to build this. Well, it might cost you $535,000. Yep. And you borrowed $500 from us. We're not necessarily going to want to extend at that point. So you're going to need to be able to cover that extra $35,000 to get it done and get out. So those are really big things that we will want to see to qualify you to ensure that the project can go forward.
Yeah, and I mean, just to kind of touch on some standard profiles we see in this space. I mean, it's very much varied across the board, but it's typically, like we mentioned, not someone who's an established builder who's been doing it for 10 years who does 50 builds a year. It's typically not them. They're the ones who have reached, they're either got bank financing or they get the big credit facility. They're able to use that as their cash flow, right?
Yep.
It's more so, the experienced contractor who's been out there and maybe he works for a big builder already, but he understands how to build his own property. He's doing a couple on the side for himself or his small business.
Yep.
It could be the first-time builder or first-time developer doing, a smaller project to kind of dip their toe into it. And the bank doesn't want to bet on something like that, or they don't have that liquidity requirement.
Yep.
Like we want to see liquidity, but we're not necessarily looking for, 25% cash reserve or whatever the bank's looking for to have that on hand at all times, right?
Yep.
What other profiles could we see? We could see just standard real estate investors, like you mentioned, if it was like a flip scenario or, a major reno of some sort. Those would be kind of some of the primary profiles we'd see in the construction space.
Yeah, you might see the odd independent build as well, but it's probably you want to see someone who's done it a few times previously. Like I don't know that we would want to be the first private to do their home build.
Absolutely. So I'd say it's either someone who's got experience, or if they've never swung a hammer before in their lives, they're hiring the general contractor to do it on site. Someone who is experienced, right?
Yeah.
So, and it could be, we often do see, people who are building single family who have AAA credit scores, 850 credit scores.
Yeah.
But they've been too frustrated with the process at the bank or the credit union. And they say, I want to kind of push the easy button here and go this way. I'm willing to pay a bit of a premium, but I know I'm going to get this done in a shorter timeline and my family can move in. Yeah. And then I'll have my pick of the litter for where I refinance my loan for the long term.
Yeah. Right? Oftentimes those people have a fair bit of cash too, it seems like, and they just don't want to pull their investments.
Exactly. Or they have a very short time frame they need the loan for. If they go from weather tight to completion in 5 months, 6 months, you can be very efficient there.
Yeah.
So we kind of touched on some of this already, but why private lending works so well for construction. So typically, we're not dealing with the same volumes as a bank would. So we have a bit more capacity to be able to take on that admin burden.
Yep.
We've got, speed, of course. This is critical in construction loans. We're approving within a day, realistically 24-hour, same day or next day draws when we do get a draw request as well. Mm-hmm. Tons of flexibility. So I mentioned it already, but we're willing to work with, owner builders, small builders, first-time builders in certain scenarios, and just be outside of the box that traditional lending institutions would be.
Yep.
Of course, lower holding costs. So with the quicker access to draw funds, that means you're getting your construction done faster. You've got lower carrying costs overall in terms of the mortgage interest you're paying, the taxes you're paying, different utilities, and you end up having that cost savings in the long run if you're able to be more efficient, okay? And then last but not least, of course, is just a more simple process. So you don't have to go through those layers and those weeks of delays to provide that documentation to your lender just to draw those funds out of them.
100%. I just want to touch on the cost thing. So our rates would be higher. A private's rates would be higher, but ultimately there's some savings, and you might not need a cost consultant. And then the timeline, like Ryan mentioned, so it's always worth kind of penciling it out, because I know there is a sticker shock when you see the cost of the capital for someone who's new to it. But that's what I ended up finding with myself when I did that project, where I ended up just bankrolling it. When I look at the cost that I lost on what I could do with my money, combined with the extension in the project length, combined with all the other things that they wanted to see with the cost consultant and the accounting work that had to be done, it really wasn't that much different. But then there was just like the headache burden of like, instead of me calling all these people, waiting all these responses, when I wanted to draw, I just texted Ryan or Zach or whoever it was at the time, and they'd come out to site, we'd be good to go, or I get send them pictures. Like we had a working relationship, and it just made things go so fast and so smooth. And again, if you're in this, you'll understand, like you have 1 million people to maintain. Having to maintain the bank on top of that is a nightmare. So
Absolutely.
To that point, I kind of started here now, but how does that draw process work? So first, your total loan amount is based on a as complete value of your project. So I alluded to one earlier, $1 million house, we'll say. Typically, for construction, you'd get up to about 65% of that. It's very different if you're doing CMHC construction on a multi-unit. This has nothing to do with that. But yeah, so we'll say 65%. So you get $650,000 accessible to you to get that project done. And typically it's done in a 3 to 4 draw structure. So we have a 3 draw structure drawn up here. So for this house, let's say your first draw would be once it's weather tight. So that means foundation's in, it's framed up, and your roofing is on, your windows and doors are in place. Siding would be great, but typically windows and doors, that's considered a weather tight project. We would then advance 40% of that money to then keep you rolling. So obviously you can pay off some of the trades that are there and then use that to get the next stage done. The next one that everyone knows is drywall. So once drywall's ready to go, everything's been roughed in, your plumbing, your electrical, insulation's in place, that's the next stage. It's also typically an easy way because you can get a permit that you'll need to get a permit from the city or wherever your municipality is, basically stating that you're ready for drywall. So that's a great and easy way for us as a private to know that, okay, you have actually accomplished everything you said you have, because you have a document from the city saying, yes, you can put up drywall. And so that's considered about 70% complete. At that point, we'll advance up to 70% of that $650K. And then finally, there's like a 95% completion point when you're basically tidying up the last few things. Cabinets are in, floors are in, maybe there's some miscellaneous small trim items, some light fixtures here and there, like just the small nitpicky things that are left to be finished, but you're pretty much there. Then we'll give you another draw to finish that off. You can pay everyone out. I'll give you a little bit of cash to just get it across the line. Yep. But typically what we'll do is we'll work with an appraiser or the PM, depending on what the project is, to give us those updates. Depending on the size of the project, we will physically come out. We might have to send out an appraiser or a trusted party to take a look at that to verify what's taking place. And so that makes it's much easier though than having to get like a cost consultant combined with a specific appraiser for the bank. Like if we can't get an appraiser for a week, we will physically visit your site. Like we don't want to see your project go sideways. Yep. So that is how it typically works. Again, when you're starting, you need to be able to get yourself out of the ground. It's very hard to just be like, I have this piece of land and now I want to start this project. Can you guys give me a couple $100,000 against the land? I wouldn't bank on that at the start. That's something that you build as many years of experience and a relationship shown. If you can successfully complete projects, then there might be that opportunity, but not an opening project. We've mentioned this many times, but intense draws that take a lot of work to get them released can really mess up your project. So if you've done this before, you know that. If you haven't, I can attest to it. It is the most stressful thing in the world when you're like, God damn it, I'm at 69%, so the bank won't release my stupid draw. And now I have all these contractors killing me, plus the new guys won't get started, and your whole project just starts to fall apart. The stress level, that to me, that in itself is worth the rate. Yeah. But anyways.
That's a great point you brought up there, because if you are at 69 and the bank needs you to get to 70 or even 63 or 61 or whatever, like from a private perspective, we can just look at that and say, okay, well, we'll give you
off.
Well, we'll give you 2/3 of the draw or something like that. We can have that discussion internally and then just make a decision that makes sense.
Which the bank will do, but you have to go through 9 layers of people to get an exception made, and you'll spend 2 weeks chasing around in circles. But yes, versus to Ryan's point, a private can look at that just logically, quickly. It's a smaller division. It's what we focus on doing, so we'll make it happen for you quickly.
Yeah, exactly. And I think we've kind of covered this well for the most part, Neal. A couple other things I just want to mention, kind of as side notes here, but you mentioned that we typically would advance the first amount of funds when it's at the weather tight stage. But we have people coming to us and say, well, I already put my money into the land. I need money for the foundation. Like, can you help?
Yeah.
And, we would, just to be frank, we would rather the shell of the home be up, because then there's actual value there. If something was to ever go wrong, we could get in there and at least finish it, and you'd be, almost halfway there, right?
Yeah.
But sometimes it's not always feasible. Occasionally, if it's in like an urban area, we'll consider the land value and we'll do a small draw up front, or we'll do a draw at the foundation stage, call it 20% instead of 40%, help them progress the project. Another thing to keep in mind too, you can use other properties you may have. I was
going to say other additional equity.
So you might have your existing home. Maybe it's a smaller home and you got a growing family, and then you're building a bigger home for your family, right? Mm-hmm. But you could have a ton of equity in that house, but you can't sell it yet because your build's not done. We could leverage that. We could go in second position to your current mortgage holder.
Yep.
And maybe there's $50K or $150K in equity there that we can give you up front. Right? And that helps you get that foundation in. That helps you get to that weather tight stage. We have our comfort because we get that additional security in advancing those funds up front.
Yeah.
Something else to keep in mind. And we said this 6 times already, but like using the private funds and then refinancing with that traditional lender, ideally leveraging your broker to go find, or give you 4 different options for takeout financing, because believe me, A lenders, they like new product.
Yep.
When it's a new product, they might make some more exceptions to get that brand new build on their books and lock you in for 5 years, right? But that helps you stabilize as well. And then versus going to an institution who's doing your construction financing and then forcing you to lock in at a rate for 5 years or 3 years or whatever it might be at whatever their posted rate is, right?
Totally.
This gives you that flexibility. And I think I've mentioned it on here before, but we have a construction calculator at Keystone as well that we provide to our broker partners. So if you're a broker listening and you want a copy of that, please reach out to me, ryan@keycop.ca. Or if you're even a builder and you want to see this as well, I'm happy to share it with you as well and connect you with one of our great broker partners. So that's kind of it. Neal, is there anything else you want to do to wrap up on the construction side?
No, it all looks good to me. I think people know well what they got to do now.
Anybody who's listening, if you have someone in your network that is interested in the construction space or is considering a build, please share this episode with them. Share the podcast with them. We want to grow. We want to continue growing this, but we appreciate you all listening today, and we'll catch you next time.
Thanks, guys.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.